let's talk first about Bitcoin, because 59,000 for months has been something that you said was important. And this is how many times have we seen it tests 59?
Yeah, this is probably the third test.
Is it going to hold? And if it doesn't, I was talking the other day about if it didn't hold, and it wasn't you, I don't think, but someone told me some terrible number about where it could go if it broke 59.
It's not to say the bottom drops out, but the next major support, we're talking low 40s.
Welcome to the Opportunity Zone in Bitcoin. Might not feel like it, might feel like the world is literally on fire and the investments in crypto make absolutely no sense in this environment, but I'm telling you right now, this is where legends are made, and we have some excellent signals that are flashing right now. They don't point to a V-shaped recovery in the immediate month or 2 months even, but they actually are signaling a broader expectation that the 4-year cycle is still driving the ship. We are actually on a perfect roadmap to make sure the DCA timeframe of this year is taken advantage of to the fullest. And as you can see, CNBC is feeling the heat, bringing on a pretty based analyst to talk about where Bitcoin's likely to head.
I heard even worse. I heard someone say even worse than that.
That can't be unheard of for Bitcoin, knowing the volatility. It's down about 30% after failing right at that 200-day moving average. It was almost perfect right there as resistance. So that continues to be resistance. It's obviously trending lower. The good news for Bitcoin traders or investors is that we have a long-term oversold condition, and it's been in place for a duration at which it usually starts to impact the chart. So we're looking for stabilization. Ideally, it does happen in this range because it is a key Fibonacci retracement level.
We're hitting long-term oversold conditions, key Fibonacci levels, and really a pattern for Bitcoin that's played out for a few different cycles. So I'm going to give you all of these different major indicators, but I'm telling you, timing is everything when it comes to crypto. And this is what we're working on in the background to make sure our community is well prepared to strike when the fire is hot. This year is going to be an opportunity that we're going to wish we had as we move forward towards 2029. Thank you very much for joining me on this episode today. Appreciate you paying attention while the chips are down. This is where legends are made. Let's get into these charts, folks. Now, for top blasters of the recent all-time high for Bitcoin, this is a catastrophe. We are down by about 53% from that local high at $126,000, retracing by about 54% as things sit right now. But the key here is that long-term oversold conditions are showing and long-term holder supply is increasing. We're seeing long-term Bitcoin holders actually hammering in to the fear. They're buying the fear. They're buying the dip in a very major way. You can see the historic upswings to the long-term holder supply come in actually before the price begins to skyrocket. This happens time and time again. The OGs know what comes next. So not only do I want to highlight this wonderful chart that shows that the old school whales are loading up, but there are two more major indicators that play into my time frame for when it comes to backing up the truck in crypto. That analyst on CNBC brought up the 618 Fibonacci golden pocket. Let's take a look at what she's talking about here. So from low to high of this last bull market, we have a 618 golden pocket that is now being tapped by Bitcoin and actually was tapped this week. As you can see, the 618 is landing right at $58,000 flat. Now, in bull markets of the past, we have seen a full retracement all the way down to the 786. But I am of the argument that instead of a few $100 billion market cap in the bear of last bear market, we are now sitting at a $1 trillion market cap for Bitcoin, a much different environment, a much different amount of money to move up and down. So I am expecting a general range around this 618 to hold over the course of the next few months. Now, a retracement down to the 786 that would mirror the bear market of 2022 would actually bring Bitcoin's price down into the $40,000 region. So fib retracements are looking at a key level right now at a $58,000 support, but there's another one that I want to show you, the 200 SMA. The 200 SMA has often acted as a trampoline for Bitcoin's bear markets. And historically, we do punch below this SMA by a good degree in the depths of the pain. When FTX collapsed, we went 30% below this level. So if we see another major linchpin, something systemic that collapses in crypto and Bitcoin, absolutely leave it on the table for entry points around that $40,000 region. But in general, if you're looking at Bitcoin in the long-term adoption, in the long-term growth of this network, really what I'm seeing is a likelihood that we're actually going to find some bounce within the 50K region. I do have to put my short-term sights in the $54,000 mark. There is a lot of liquidity at $54,000, and $54,000 is kind of the bottom end of the major volume node that we have developed once ETFs were released. I can show you very simply what that means here. This volume node, the amount of Bitcoin that was sold and bought, is larger than any other volume node in Bitcoin's history. Much girth here. And we actually have the bottom end of this volume node right here at this point, $54,000. 54K is Helm's Deep. And if we cannot defend that $54,000 mark, it is a fast ride down to this major volume node sitting at 42K. Now, one more important thing to acknowledge in our current price action is we have absolutely lost the support that was there at $64,000. I'm going to show you what that looks like on the chart and show you some comparisons to the last bear market to calm some nerves, because I absolutely feel confident that we have a solid roadmap to follow the 4-year cycle. Even though we hit new all-time highs a little bit early, we hit new all-time highs in March of 2024 ahead of the Bitcoin halving. But really, everything else about the 4-year cycle looks pretty sound to me. The time frame from top to top still lands at 1,400 days, each single cycle high to cycle high. The time frame for each cycle high to the next is still landing smack dab at 1,400 days from each local high, right? This is the 2017 high to the 2021 high. Then we fast forward to this bull market that we just experienced. From the 21 high to that 126 blow off top, it was exactly 1,428 days, really only 5 days of difference between each of those local highs. Now, sentiment in this current scenario is matching on a fear and greed metric this current scenario right here in July and June of 2022 to damn near a T. And I want to show you exactly what I mean by that. You can see that we have just a general parallel channel that was lost. We absolutely hit the top of this parallel channel and zipped to the downside, scooping up all that liquidity below us. Basically a carbon copy situation of the June to July run-up of 2022, where we ran all the way till August, but then zipped out of that range and started finding the liquidity lower. Now, we actually went 11% below this capitulation wick right here, where we hit $17,000, finally finding our floor at 15.5K. Structurally, I see a lot of similarities from a bunch of different metrics overlaying that we are essentially in this type of season. Essentially, I'm seeing a lot of different metrics that are pointing to we are comparatively to where we were in October of 2022. Now, this would likely indicate that you're going to see some chop, some grind here in this zone before a final FU candle that really puts people at an all-time low in terms of sentiment towards Bitcoin, probably through the course of the end of the year. Now, if we overlay this current situation, which I have indeed done for everyone in the channel here, I want to show you my actual target. I think that we can accomplish a lower 50s liquidity sweep somewhere around the late August timeframe. Maybe we get pushed all the way to September. There is going to be some difference to a degree in this, but I think a swoop down and snagging all that liquidity, causing massive capitulation at the lower $50,000 mark is likely given this data. Now, if you saw the thumbnail, you'd see that I think it's time. It is time to start taking DCAing very seriously over the course of the remainder of this year. I love buying cheaper Bitcoin, and I actually am hedged pretty well in this situation with a longer term short that I'm holding in case we see that capitulation all the way down to $40,000. I get a bunch of tether and go buy up cheaper Bitcoin with that. It is a hedge. It is a tool that I use. Leverage is a tool. So with all this information, do what you may. This is my plan. This is my crypto approach for the remainder of the year. But I am building out a very concise game plan of how I've done this for multiple cycles in timing out, especially the altcoin sector. because I made some major increases to my Satoshis by using altcoins as that vehicle, but it's all about timing. And you have to be very specific about that timing when it comes to those. I'm not in the mood to buy altcoins right now. I'm watching Bitcoin, I'm buying Bitcoin, and I am trading Bitcoin very actively. And the time frame will come, but you're going to have to stay tuned for that a little bit later on. And I hope that you are staying based in this massive pullback. I'll see you on the next one.